Today, market participants are alert to comments of several Fed policymakers. They might provide the market with clues to the Fed's agenda for interest rates. Today, investors observed the data on the U.S. construction sector, the Fed's Beige book, and the TIC streaming. Among the speakers today are centrist Christopher Waller and the two hawks, John Williams and Patrick Harker. The highlight of the week is certainly a speech by Jerome Powell tomorrow. Today, Wall Street opened quietly. Yesterday, the benchmark stock indexes closed with modest losses. Interestingly, the indexes tumbled briefly by more than 1%, and later on the S&P 500 even hit October highs. Buying during a deep drawdown suggests the assumption of a further growth of the key stock indexes. The strategy for October, namely betting on a rebound, has proven itself. Fresh economic data has been stronger than forecasts. At the same time, this upside might spoil the chance of prompt changes in the Fed's monetary policy on the back of a stubborn inflation. As a result, yields of 10-year treasuries have climbed above 4.8% on a year, whereas the US dollar retains its strength. Nevertheless, high borrowing costs complicate financial operations and might jeopardize the financial welfare of the U.S. companies, and the Federal Reserve will hardly push ahead with the aggressive auctions. The forecast by CME Group confirmed this scenario. Fed funds futures foresee a 90% chance of a pause in the Fed's rate hikes by November 1. Wall Street indexes are trading in the predicted manner. They are recovering in confidence after collapse in September, when the stock market printed the lowest levels in the third quarter. The S&P 500 clicked into gear and approached the level of 4,200 points. Lately, it nearly touched the level of 4,400 points, and today the index traded at 4,350 points in the early New York session. In terms of a technical analysis, the index is likely to grow as high as 4,450. It promises a further rise. The US dollar index is trading under pressure because positive economic data from China revived the appetite for risk. On the flip side, the military conflict in the Middle East dampens demand for risky assets. These factors offset each other, so the US currency has settled firmly above 106 points. Upbeat macroeconomic data on the United States also ensures confidence in the US currency. Importantly, yields of 10-year treasuries have jumped by almost 100 basis points since mid-July, and the US dollar index has appreciated by 7% after the same time. The US dollar is clearly overbought, hence we expect its correctional decline in the near time. When the retracement occurs, the first downward target is seen at 105.53, which also acts as a support. Speaking of the bullish outlook, if the US dollar index passes 106.80, the door will be open to 107.34 and the highest level of the year. The instrument rebounded in the early New York session, trading at about 106.40. The number of building permits in the United States dropped by 4.4% to 1,473 million in September. It's below the 10-month high of 1.541 million reached in August. Still, the reading for September surpasses the consensus of 1,450,000. On the minus side, mortgage rates at multi-year highs affected demand for homes. On the plus side, the shortage of available homes for sale provided some support. The real estate market in the United States showed green shoots of recovery in September, and the number of housing starts surged by 7% in months. The indicator rebounded from the upwardly revised three-year low recorded in the previous months. The outlook for the Canadian dollar is pessimistic, and today it's sensitive to the US economic data. The loonie is still feeling the aftertaste of yesterday's inflation report. Economic growth in Canada stalled in the second and third quarters. It means that robust domestic consumption is set to ebb away in the coming quarters, so that the central bank does not have to resort to extra monetary tightening. The Canadian dollar is weakening because traders are revising sentiment because they predict less likelihood that the Bank of Canada will raise the key interest rate. The market has already priced in another rate hike by 25 basis points until the year end. Besides, market participants believe that the regulator will hardly cut interest rates next year. This revision of a forecast ensures the weakness in the Canadian dollar, so the USD CAD pair is expected to climb to 1.3900. Bitcoin produced a sensation yesterday. Crypto investors are still amazed by its stunning rally, and the token is likely to retain its resilience with a bullish bias. Investors have reaped some gains and are now bullish about Bitcoin. At the same time, they want to play safe because the global bullish trend is not recognized yet. Bitcoin might be hurt as traders might be willing to close positions with a profit taken. In turn, such activity could enable a small decline. The key level is 28,345, and the crypto is trading at around this level today. It's crucial to keep this level for a further rise to 30,000. Bearing in mind optimism in the crypto market, traders are betting on a Bitcoin's growth, overcoming the level of 29,000, and the technical picture signals that the market is getting overbought, thus a downward correction is around the corner. Alternatively, the token might go down and reach to 27,420 amid the overall bullish trend. If this support is lost, the bullish scenario will be at stake. And we hope that our regular videos will help you make well-rounded trading decisions. We appreciate your comments and are ready to answer all your questions. See you online tomorrow.